As an entrepreneur, the way you use money, your culture in managing your finances could make or mar your business. On today's edition of Business Connect, we are going to be discussing how smart entrepreneurs handle money. And as always, I have a very special guest with me here on set. She is the principal consultant and managing partner of Nike-Co Chartered Accountants, a firm of professional financial and automated process consultants. Today, we are going to be benefiting from her over 25 years of consummate experience in accounting systems and internal control. Pastor Nike Gbenga-Kehinde, you are welcome to Business Connect.
Thank you so much. It's indeed a pleasure to be here. I'm so honored. Thank you for having me.
You're welcome. Wonderful. So we're going to go on a short break now, and when we get back, we will get right into it. Don't go anywhere. We'll be right back.
There is a life full of unlimited possibilities. There is a solution to every situation you may be going through. Yes, your life can be beautiful. You can experience complete transformation in every area of your life. Love World Plus Response Center is here to show you how. Contact us through our various platforms for prayers, counseling, inquiry, and contributions. Call the numbers now showing on your screen. Send an email to info@loveworldplus.org or chat live with us at real time. Log on to www.loveworldplus.org. God bless you.
Welcome back. Pastor Nike, you are welcome again to Business Connect.
Thank you very much.
Pastor, we're talking about how smart entrepreneurs handle money. And I think that the first question for many entrepreneurs is, which money should I save? Which one should I spend? Which one should I reinvest? That's a problem that a lot of entrepreneurs grapple with every time.
Thank you so very much for having me once again. Before I answer your question, I can't but seize this opportunity to thank our dearly and esteemed man of God for this privilege, this opportunity of addressing this glorious people, beautiful people all around the world. I mean, I'm so grateful, Pastor. You made this platform possible. And for this, I'm eternally grateful. I love you so much, sir. Thank you so much for the privilege. Thank you. The beginning of answering that question is to actually know what your profits in your business is. If you know what profit you're making, then you can answer that question and decide on what percentage of that profit do you want to reinvest, what percentage do you want to save, what percentage do you want to spend. So, but before you can know your profit, you must have a good understanding of your costs. And that is where record keeping comes in. You see, most entrepreneurs, from my experience, don't keep records. You see, especially they think they're so busy, they're involved in the profit, they're involved in the work, they don't have staff. And because of that, they're not keeping the records. They're waiting for the auditor to come at the end of the year or at the end of 2 years, depending on when the bank is mounting pressure for them to bring their audited accounts. And that is just too late. Because if you run that way, you are actually driving your car, the car of your business, blindfolded. Nobody drives like that. I mean, you would think somebody is mad to do that. And imagine that's how a lot of entrepreneurs run their businesses, blindfolded, not understanding what their costs are, not understanding what their profits are. And because of that, it's not a wonder that, like you're saying, it's now a mini, money, more kind of gambling thing of how much should I spend, how much should I invest. It shouldn't be that way.
Record keeping, it seems like a complex activity because we see what accountants do. They go through a lot of figures. So when you're asking an entrepreneur to keep records, is that what you're also asking them to do exactly?
Well, not exactly, because when you're keeping records, the objective of why you're keeping the record is what you should bear in mind. And that's what determines how much, how detailed or how complicated it is. And remember that the financial accountant, the auditor, they're producing that audited accounts, not just for the management. They're doing it as a statutory requirement. So the stakeholders out there, the governments, the investors, is for whosoever. So their level of meticulousness in the record keeping is required. But for you, preparing and keeping your record for your own internal use. I will always ask, how does the housewife keep her record? You know, how complicated is it to keep the record of what you're going to buy in the market and so on? So for you, I mean, even the uneducated trader has to keep a record of how much he's buying and selling. But as an entrepreneur, an educated and enlightened entrepreneur, you want to keep records of your costs. And it has to be complete, you know, and detailed enough for you to understand in such a way that even if you don't remember again what happened, the record should remind you. So it should be detailed enough for you to remind you. Imagine a person issuing a check and not even taking advantage of the check stub. That happens a lot. You know, they just tear out the check, fill the check, they stop, they're not putting in the detail of what the money was. Why were you paying this money at this point in time? It's not enough to say payee is allergy something. You know, it should be for the purchase of quantity at this price. You know, you can put all that detail in the stuff.
That's that small part that is left inside the checkbook.
Yes. So, I mean, to let you know that really the attitude is what is critical. The attitude of wanting to keep records in a way that you can refer to it again and again. You know, so it doesn't have to be so complicated. It should just be clear enough for you to have complete and accurate information that you can put together and work with.
And on the issue of record keeping, we have a lot of entrepreneurs who, they feel their businesses are so small. So, I mean, they earn it, they spend it, they use it for their lives. So, if I'm a business person at that level, can I really keep records? Or what kind of records do I keep?
Absolutely. From the first day of your business, which is when you're investing money into the company, you need to keep the record. Because these are your investments that you want to recover.
Yeah.
And even if it's your personal money, it's not somebody else that, you know, loaned you the money or borrowed you the money or invested in your company, you still need to keep detailed record of what you've spent to do what. Because those are your pre-incorporation expenses. And they're things that you can capture and use to even reduce your tax. You know, your tax obligation as the business begins to run. But if you don't even have that record, how are you going to recover it? You know, are you going to claim it back? So it's important to, from the first day, to keep the record of the costs. Now, as you begin to now generate income, of course, you then keep the record of your income as well. And the cost, the variable cost of incurring that income.
But the question now is, how do I effectively separate myself from the business?
It starts with a mindset. You must have the mindset of the fact that your company is different from you. It's a separate entity from you. And then also decide, make up your mind really, because we don't all want the same thing. Yeah. So what do you want out of this business? Do you just want something to run and live on while you are here on this side of the planet? Or do you want to establish a legacy? Do you want your company to outlive you? So depending on what you want, then from the first day, you start with that end in mind. Yeah. So I'm talking to someone that wants his business to outlive him. I'm addressing and I'm interested in helping that entrepreneur that wants to leave a legacy, leave a company that, I mean, the McDonald's of this world, the Coca-Cola of this world, these are companies that are running into hundreds of years, but they started with just one man. So I'm talking to that entrepreneur that wants his company, his idea, the solution, because your company is actually providing a solution. Your company is addressing a need, and that need will always be there. If you now want the company to continue to meet that need, the choice is yours. So if you have that mindset that you want to develop, I mean, to build an enterprise, an empire that is bigger than you, then from the first day, you have to be dealing with that entity as though it is bigger than you. And you know, as Christians, really, this is even the principle that we function by. We call the things that be not as though they are. So from the first day, you begin to recognize that this company has employed me. I'm the promoter, I'm the owner of the business, but this company has employed me as the managing director. Okay. And so just the way you will respect another company employing you as their managing director of that organization, respect this your own promoted company and work with that mindset.
But there's some entrepreneurs there, I am George and Juro, I am King of Kings here. how and checking yourself sometimes is challenging. So like, how do I do that?
You must check yourself. You must put controls in place. You see, I mean, if for example, you were working as a banker before you,
Yes.
you started your company. As a banker, there is a lifestyle that you're used to. There's a salary remuneration that you're familiar with. Now, here you are starting your company on the first day. It would be ludicrous for you to think that that young company would be paying you the same salary that you were earning in the bank. If you try to do that, you're crucifying what you've just started. You see, so, but how would you know? You would only know when you're able to generate the returns. I mean, look at what the returns is that this business is generating at in the first month, second month. Then you will know what the profit is and know what percentage of that profit you are able to take. Even if you, and at the same time, you also want to reinvest. Yes. Now, if you're able to differentiate between the variable cost and the fixed costs, and then the profits, then it's easy for you, once you get the revenue, to know that this portion that covers the cost needs to go back into the business. Okay. For me to continue to operate at the same level that I started with. And now you don't want to remain at that level. You want to even be increasing your capacity as you grow. So you then want to even take out of that profit to increase the capacity of the organization. So you have to decide from the profits, what can your company afford to pay you as the sole employee, sole promoter of the organization at the beginning.
Because at that time you're wearing many caps.
You're wearing many caps. You're wearing the cap of the accountant, the marketer, you're the MD. But you should be aware that that's what you're doing. Be aware that at this time, this company has engaged me as the employee. I'm the manager, I'm the marketer, I'm the accountant, you know, I'm the storekeeper. So I'm wearing all those caps. And that also gets you, you know, structured in your thinking, such that by the time you're recruiting someone, you also know that this person you're recruiting will be wearing many caps as well. Okay. So you're looking for skilled hands that can even do better than you in the area that you are not doing well in, because you know the caps you're wearing and you know how well you're performing in all these areas. So you can judge, I need help in the area of marketing and sales. At the same time, I need help in the area of accounting. So if I can get someone that can combine that two very well, better than I'm doing, then that's the candidate for this position. So you're careful, you're specific, and you're not rushing. You know, you take time to get to recruit the right hands, for your company, knowing that this company needs to get people that are better than you for it to continue to grow to become bigger than you.
And you, wow. Okay. So much already learned. We're going to go on a short break now, and when we come back, we will take the conversation to another level. Please don't go anywhere.
Level Plus is now on your mobile format and connects you in real time. You can now watch your favorite programs, episodes, live shows, prayer shows, features, live TV, archive videos, and lots more. You can also participate with your comments and contributions from anywhere in the world. Download on any of your mobile device, whether it's Android or iOS or Windows, the Level Plus mobile app now, and stay connected. Level Plus, totally you.
Welcome back. My guest is still Pastor Nike Gbenga-Kehinde, and we're talking about how smart entrepreneurs manage money. Pastor, what is your take on an entrepreneur investing in the stock market, forex trading, all in a bid to hedge or maybe multiply the company savings?
Well, I would say it's a good idea. Okay. It's just that these platforms and or channels of investments, they're places where you need to be skilled to operate on those platforms. They're not things that you dabble in by yourself. So if you're going to operate in either the stock markets or even the forex markets, you need to work with a skilled professional, maybe a stockbroker or a forex dealer that is proven, you know, and you're sure of their track record, in managing those kind of taking those kind of decisions, because you need to. There are tools they use, you know, there are reports they have to analyze to be able to understand the trend and advise on which one to go in for. For example, Nigeria is undergoing a revamping of our power sector. Yes. So if a company were to be floated now, today, with the information we have about the consumption level of our power, the need for power consumption, but yet the capacity that we presently have is far lower than the need. So you can judge and say, well, that means this power sector is going to be growing because the need is there, and we can't even exhaust that need. So if you put money in there, you're not putting money in it for just 1 year time. You know, you're looking at in the next 5 years being able to, you know, take advantage of the growth in that sector. And then the Forex, on the other hand, it's a short-term, you know, thing, but it's also very tricky. The risk is very high. You know how it is, they tell you that the higher the risk, you know, the higher the return. But at the same time, you are an entrepreneur with limited funds. So you are going to be balancing the liquidity of your business with the risk exposure. You can't afford to not have the money when you want to use the money, because this is the money that you're using to run the business. If you don't have, I mean, if you've generated the funds and you've tied down your funds in such a way that when you now need it, you can't use it, you will have to go to the alternative market, money market, to get the money. And that is now paying expensive interest rates that could have been avoided. So you are going to be balancing your liquidity needs, you know, with ability, your investment aspirations.
At what point does a business seek a loan or seek to get credit or go to the money market to help you know, cover the expenses that he has at the time? At what point is it advisable for a business to do that?
It depends on such a decision has to be evaluated, actually. You can do it. It's not like there's a point in time when you can do it. You can do it at any time. You can even do it at the beginning. It depends on the returns. You have to do your maths properly and determine on the profitability of what you plan to do, and consider the margin. You know, the margin must way be more than the interest you will have to pay on the loan. And when we're talking about interest on loan, we're not just talking about the per annum interest. You're talking also about the other fees, the management fees. So you're looking at the effective rates that you're going to be paying on that loan. So you calculate the returns that you're expecting on what you want to use the money for to then decide whether you can afford to go to take a loan on it.
So one thing that you've said now is that you've got to think through it first. You don't just take a loan because you have a need.
No, you have to think through it.
You have to think through it and ensure that you can pay back.
Yes, the right thing really is, it's not right for you to, for example, take a loan to run your consumptions, your operations, your operational expenses, except if the operational expenses are directly related, you know, to the business that you want to do. So as I mean, I'm talking about the fact that except if this operational expense are your variable costs. For example, if you're into a service, if you're a service organization, then really most of your operational costs will be directly related to the service you're providing. But if you're a trading organization, then your the cost of your stock will be directly related to the operations, what you're into. So you just have to decide on the returns, you know, calculate the returns that you're going to be making. And it's not sometimes, for example, you also need to be aware that loans give you the capacity to do more with your business. And loan is not only when you get it from the bank. Yeah, all right, your liability is not only when it comes from the bank, when it's interest bearing. You actually can expand your capacity by also getting items on credit. And that is the best way, because for such cases, you are not probably even paying interest on it. But if you can service that obligation well, that is, you pay your suppliers as at when you should, they'll be encouraged to extend the credits that they're giving you. So maybe before now, they've been giving you goods worth $1 million on credits. Now, because you've been meeting your obligations, paying on time, turning that over rightly, they are now even offering you, we can even move it to 2 million, can give you 2 million worth of goods on credit. And that is how your capacity expands through credits. So everything is not about credit that you pay interest on. You actually can look out for credits that you get as partnership, you know, in the course of the business, and that actually helps to grow your business. It increases your capacity, the size of your balance sheets.
True. I know a business, it was one of my clients at the time, who took a loan to create a building. Now, that building was going to take 2 years to build. Took a loan to build it, and the loan was timed for 6 months. Was that an intelligent decision? Of course it wasn't, but then a lot of businesses make all these kind of decisions all the time. Have you experienced that kind before?
Yes, we have. I mean, a case in point was the one that's really about the fact of not even understanding the business you're into because you probably didn't calculate it well. You just got a deal, maybe a contract, an LPO. They're saying, oh, you are the sole distributor. That's what happened to that company. You are the sole agent for us. And it was at the beginning of GSM, you know.
Okay.
So here was this company engaged to be the sole distributor of the cards, you know, the airtime, representing one of the providers then. And so it was an exciting deal, incredible, sole distributor of airtime. And so they thought, I mean, all the monies was going to be coming through them, which is true. They got a loan from the bank, they got a facility, bought cars, all that. Calculating all of that, the margin, on, no matter how big the money is, it's a finite margin.
Yes.
It's not indefinite. So by the time the reality happened, I mean, the company was already in a loss position before they even started. And unfortunately for them, because they wanted to automate the whole process, they weren't actually keeping records. They were waiting for this automation to happen. And at the end of the day, there was no record really to show for it. And many companies are like that.
Go through that. So they didn't know how much was their own money.
They didn't know how much
in all the money that was coming in.
In all the money that was coming in. And because, I mean, a small entrepreneur, for example, would immediately start spending that money. Because you see money in the bank. Oh, you even start borrowing your family members. Meanwhile, that money is not all yours.
Yes.
It's actually the supplier's money. You're going to be paying a lot of it back. So just because you are holding on to it temporarily does not make it yours. However, depending on the tenor, the credit tenor that you have with your supplier, you can do other things with that money. Instead of dashing it out or spending it, you could invest it, which is what the first question, the earlier question about not leaving, you know, putting your money into shares or stock. If you have the opportunity to keep some extra money with you, instead of leaving it in the bank, you can think of more opportunities to reinvest it, not to spend it, not to consume it, because you will still need to pay it back. So you reinvest it in a secure facility that ensures and guarantees your capital, that capital will not diminish. And there are so many platforms like that. Even the money market also has some. Treasury bill is an example. You also have mutual funds wherein you put in your money. I even understand from the Forex platform that you actually also have some products there that also guarantees you your capital in different levels, 100% guarantee, 80% guarantee, such that the investment you put in is secure. So when you're dealing with the money that is not yours, that is what you go for.
Do it.
Yeah, you secure the capital and then you're waiting on the returns. So you know that it's only the returns you're getting on this that is yours. Now, when taking that decision as well, you need to consider the opportunity costs. You see, if you tie down that money into mutual funds or treasury bills, are you sure that that's the highest you can get on it? Is it really an idle fund for you? Because only if it's an idle fund that is worth it.
There.
Otherwise, your business too requires funding.
Yes.
It requires expansion. So you can put such, you know, you can reinvest such funds into your business and get your business to do bigger things.
Now, in this part of the world where economies are perpetually volatile, is it intelligent to keep my money in the bank and save everything so I can pick it when I want it? I won't have any problem. Is it advisable?
No, even a man of God has taught us about that in the finance convention, how that it's not. Because you see, the truth is, money in the bank is not idle. You are the one that kept the money with them, but the bankers are smart. They are using your money, you know, to generate their own returns. And we see them declaring these profits, you know, every day. So you need to be smart as well. You need to think about what more can this money do for you? What are the banks doing with the money? You too can step into that money market and get better. Instead of lazily leaving it in the current account or leaving it in a savings account where they're paying you 2%, you can get something better from things that are also secure. I mean, they call treasury bills the lowest risk, you know, risk-free investments. With the treasury bills, you even get more than leaving your money in the current account. That's the lowest you can do. There are other platforms that also assure you of the safety of your capital and give you a higher returns than what the banks will offer. So I think that is what the smart entrepreneur should do, instead of leaving idle funds in the bank. And another thing, anyway, that you can accept, there is also a time when you actually can leave your money in the bank.
Okay.
When you are leveraging on that money. You can leverage on the money with the bank. For example, you have 500 million in the bank and you need to take a loan. You want to do a business.
Yes.
Instead of using that 500 million to run that business, you actually can leave that cash in the bank as a collateral to a loan. This is from the same bank. So you can tell the bank, I have 500 million with you. I want a loan for 500 million. So you're matching. It's like you're giving me back my money.
Yes.
But yes, I want that, so that because you've already calculated the returns on that business, you've recognized that it's possible for you to make more. The return it's generating for you is higher than the interest you will have to pay the bank for that money. And it's also good because by getting the money from the bank, you're able to really cost the money.
Yes.
You know exactly what it's costing you to put this money in this business. Now, if it was your own money, not only would you be looking at the per capita, the return on capital, you will also be looking at the cost, the opportunity cost.
Yes.
The fact that I had to liquidate my investments. So the interest I was getting on that investment plus the returns I want to get on this, that actually begins to increase what the returns that you're expecting on these investments should be. But if you actually take a loan, it's now smarter because now you know exactly what is costing you to put this money in this business. So you can plug that in as a cost to the investments while you're calculating what returns it should come back to you. And interestingly, you can negotiate your interest rates at this point with the bank.
You can.
Because they're giving you a definite interest income on the money you've given them. And the same money is being loaned back to you.
Yes.
So you can just say, please, is the spread. I'm only going to pay you for the spread. And in that case, you're saying if they give other people 18% interest rate, you are already getting 9% on your fixed deposit, you can say, please, the difference is 9%. So I'm only going to be paying you 9% on this loan that you're giving me. And it works. The banks actually know they do such things.
As a final question, I'm looking at you and I'm thinking people watching you are thinking, how did she know all these things? How will I ever get to know it like she does? So what do you have to tell them? Because they're thinking, where do I start from?
Well, always, entrepreneurs need to have a financial consultant, just like you would want to engage the services of a lawyer.
Yes.
You cannot be skilled in all these things. There's something called outsourcing. All right. So you actually can outsource the needs that you have for your entrepreneurial management, managing your company. So you can get yourself a financial consultant that guides you and advises you as regards your money. The truth about it is banks offer this kind of services. This is what they're supposed to be doing for entrepreneurs, providing this kind of financial consulting services. So you can look for a bank, a funds manager that can help you in planning what you do with your funds in this manner.
Thank you so much for coming on the show today.
Thank you for having me.
It's been really full, packed with so much information. And I'm sure that's the same for every single person who's been watching. And I thank you so much for being out there today. Now remember that this broadcast and previous editions of Business Connect is available for you to view on www.lovoplus.org. And you can interact with us via social media on our community on UCOS. The address is www.ucos.com/groups/businessconnect. And you can also follow our super user account on King's Chat. It's called Lover Plus. It's very easy to find. Just search for super users, Lover Plus. It's very easy to find. The addresses are all scrolling on the screen right now, and we will try to reply as many messages as we can. We will come your way again, and until then, you just keep winning.